what you shared with the group was like, as you back tested, you actually saw now you needed the volatility. So how did that transition happen? Because we used to avoid trading high impact news events. We didn't want that stuff. So now it's basically flipped. Am I fair to say that?
Where do I make the biggest mistakes? How do I lose less? And for me, it was when I was on the lower time frames and I made mistakes that I felt were avoidable.
What are the big things that stand out to you, especially because you've been funded now and paid out with 3 different companies, basically? What are the standouts from CFDs versus futures that make it easier? Is it easier to remain emotionally stable because you rely on the system? Because you're rooted in your belief in the system, you don't let that oh my God, I got stopped out, I got to jump back in.
So data drives all of my decisions, and it's as simple as that. I try to remove all opinions. How does this strategy perform historically in these? And we found that 70% of the profits come from high impact USD news days. So yeah, now I do trade it because I need that volatility, especially in certain market environments, to enter my trades.
If you embrace failure and find lessons, what do? You move closer to your goal, actually. So for you, get vulnerable here. What did you do, Tom, to overcome the fear of failure? What's up, boys? Welcome back to the podcast. Today, I've got Tom Jackson in the building. We're talking about how he has transitioned from CFDs only to CFDs and futures trading. He's now funded with 3 different futures firms, as well as a couple of CFD firms. He's taken payouts on both sides of the coin, and we're going to break that down in detail today. We're going to talk about the pros and cons between the different futures firms. We're going to talk about some of the tips and tricks that Tom has for finding yourself as a trader. And that's what's really led him to a lot of his success, is he's identified how he trades best, and he's really taking a deep dive into that, cutting out the rest of the noise. We also talk about a big golf tournament that we might be trying to host at the end of the year. So stay through till the end if you want some insights into the golf tournament. And of course, we talk about the success that the Black Shirt Club members have been having. Some of Tom's students, some of my students in the crossover there in our mentorship group. So just a ton of value today. And I love chatting with Tom. And I know you guys will too. So thank you to our sponsors. Thank you to Tom. And now enjoy the episode, everybody. What's up, traders? Austin from the future. Really quick, I want to just thank our sponsor, Top One Trader. Now, a lot of you have transitioned from CFDs to futures, but I want to suggest that you don't do one or the other, you do both. And if you're looking for a reliable CFD firm, Top One Trader is your go-to. Now, they're based in the US, but more important than that, they actually are still paying traders out. If you go to their Instagram, you'll see last month they paid out over $100,000 to their profitable traders. So if you want to get funded with a CFD firm that is reliable and still paying traders out, and a firm that actually answers their customer support messages very quickly, and I have firsthand experience with that because I have a lot of people in our community that tell me how it's going with Top One, with any of our sponsors, and everyone is still very happy with the work coming from Top One. Just use the link here in the description to this video. I can save you a good little discount. You can help the channel here by supporting and using our affiliate link, and then you could be trading futures and CFDs at the same time, which I think is a no-brainer. So check out Top One. Thank you for being the sponsor. We appreciate Top One very much. And let's get back to the video. All right, traders, we're back. It's a very special episode. Me and Tommy sitting down for a home team episode. It's been too long, Tom. I honestly don't even know the last time you and me solo did an episode.
Yeah, no, I can't, because even in London, it wasn't just us two. It was, so yeah, it must have been a while. It's got to be 12 to 18 months ago.
Dude, and the London Tom was a little sick. This is fresh Tom feeling good. Summertime Tom is different than wintertime Tom. Right?
Summertime Tom is way more energetic than wintertime Tom. I can assure you. Yeah,
dude,
wintertime Tom is not much fun.
We were down bad after that, but it's good to do this, Tom. I'm really excited because you've had a lot of success in the last couple of months as you transitioned from Forex into. And it's not that you've left Forex and CFDs, but you've really picked the ball up with futures. So we're going to push this episode as a CFDs, Forex to futures transition. A lot of the audience has had me talk with some futures guys. We've still had some Forex guys, but not a lot of people doing the crossover like you. So for everybody that's listening, Tom just took his first payout from Apex. We're waiting for that to hit. That should hit probably by the time this is posted, which Tom will, of course, put that on social media. Yeah, I hope so. We'll talk about that today. Tom also has passed funding challenges with Top Step and My Funded Futures as well. So Tom has a little bit more diversification in the companies that he's working with than myself. So I actually have some good questions for us to go through today that are going to maybe compare and contrast the companies. Of course, we don't want to badmouth anybody. We don't want to bash anybody. We also don't want to praise anybody too high, but there are some differences that clearly make it easier to get payouts with one firm. Maybe there's differences that make it easier to stack accounts with another firm. And I think for the audience, for a lot of you listening, you guys are probably in this transition from Forex and CFDs into futures like we are over the last year. This is all happening in the last 6 months. Or maybe you're just new to futures in general. Maybe you just saw the free futures course we have or whatever, and you're trying to kind of get this thing started on the right foot. So I'm excited for this, Tom. This is going to be good. So let me hit you with the first thing. I want to jump in first with the style of trading. You've gone through a lot of different strategies between even before you were with ASFX years ago. Then when you transitioned to ASFX, now you've transitioned to kind of building a couple of your own strategies, all data based, very systematic, not very discretionary. If you had to pick right now today, what strategy, what form of trading would you say is easiest or most profitable for futures traders?
So I'm not sure there's a single answer to that question.
Okay.
I think it has to be around what suits you best. And yeah, I have gone around the houses with different types of strategies. And I can remember like starting in the sports betting world where I was like just trading like within like 10, like making decisions in 10 seconds, like trading order flow. And then like throughout my career as a trader, I feel like the longer it's gone on, the higher the time frame I get to, and the less sort of discretionary I get and the more systematic that I do go. But I feel like that's the journey that we all have to go on as traders, more to the point of it's like there's no right or wrong overall. You can make money trading one way, I can make money trading the other. We can trade in different directions on the same pair on the same day and both make money, etc. But I'm a massive, massive believer in that there is a right style for you. And
It's a
I
good
think
answer.
it's just about trying to find that strategy for your personality. And it can, and I'm evidence of that, it can take years. And I think that's why it does, like you hear these people, these veterans say, no, I didn't make money for 8 years, 10 years, 15 years. I understand why now, because you have to understand yourself. And it sounds so cliche. And you hear people talk about it at the start of your journey and you read these books and you watch the videos, but it's so true. And I feel like it has taken me like 5 years to get to this point now. So yeah, I don't think there is a single one. But for me, I know that systematic, data-driven, binary, very quantitative strategies are what work best for me. But that's not going to be the same for whoever's listening to this, to you, to James, to Evan, to all the people in the BSC.
Yeah. So you and I trade very differently. And I think that's what people appreciate in the mentorship when they can come in and learn from both of us and see both of us doing well in different ways. And I think your answer is actually the right answer from my perspective as well, that there is just no one size fits all. And instead of me following up with, okay, Tom, how do you find yourself as a trader? Can you just share maybe some of the journey that you've gone through, maybe just since January? It's July, right? So 7 months moving into futures. What have you done to identify the things within yourself that push you to be more systematic than discretionary? What actions could someone take rather than just be like, okay, how did Tom do it? Now what do I need to do? You know what I'm saying?
Yeah, so I know the transition point. So we're going back just a little bit further. We're going back to like the back end of last year, October time last year.
Okay.
And honestly, it was like the podcast with Jared Tendler, when we sat down with Jared Tendler, read his book, A to C game analysis, reading that book and going through the exercises that he gave and working hard with you and James specifically on understanding the patterns of where my worst behaviors came out was the light bulb moment. Journaling every single day, doing the temperature checks every single day, the markups every single day. Where do I make the biggest mistakes? How do I lose less? And for me, it was when I was on the lower time frames and I made mistakes that I felt were avoidable. That was my biggest trigger. I can handle losses pretty well. I can't if I trade properly. I can't handle losses if I feel like I'm late or I've missed an entry or something like that. That's when the spiral started. So I would then revenge trade. I'd oversize. I'd want to get that money back because I felt like I didn't deserve to lose it because I'd made an avoidable mistake. So from that point on, it was how do I reduce my ability to make mistakes? And it was move up into higher timeframes and then just remove as much sort of discretion. If I know exactly where I'm entering, how much size I'm entering for, where my stop loss is, and then where I'm exiting, that's it. And ever since that point, I feel like my trading has been the best it's ever been.
I would agree with
And
that. Is it because it's automated? It becomes almost more automated, like you're like a robot, right? Now
yeah, I try and
this
operate
all
like that
fit,
robot.
take the trade.
Yeah, I don't manage, I don't overmanage, I don't choose where or when to get out. Everything is just a set and forget style. So I know once I'm in, regardless of what price does, price action. I'm just betting that over 10,000 historical trades back tested that there's an edge in the future, and that's it, right? I used to reduce risk if we were closed underneath VWAP, if we broke back above like a range and things like that, and I would manage things while the trade was going on. I don't do any of that now. I either hit stop loss or take profit.
I think a lot of people will want to be trading something like that, that set and forget systematic way. And if you're the kind of person as the listener who you know yourself, maybe through your past career, you're maybe a data driven person, very systematized person that might fit your style. Does this also, Tom, coincide with the transition that you made to trading more news events, trading more volatility? Because I think you've always been big about back testing. And what you found, what you shared with the group was like, as you back tested, you actually saw now you needed the volatility. So how did that transition happen? Because we used to avoid trading high impact news events. We didn't want that stuff. So now it's basically flipped. Am I fair to say
Yeah,
that?
yeah, exactly that. And so data drives all of my decisions. And it's as simple as that. I try to remove all opinions. And when I was going through all of the data, all the testing, I wanted to just be completely and utterly open-minded. And I went back and I've went through Forex Factory. I got all of the historical dates of news, CPI, NFP, BPI, all of the major news events. And I tested it. I was like, how does this strategy perform historically in these? And we found that 70% of the profits come from high impact USD news days. So yeah, now I do trade it because I need that volatility, especially in certain market environments, to enter my trades. But the downside of this is it's not going to be for everybody. There are days where I can enter a trade and I can be stopped out in a minute or two, and it just goes blast straight through. And for most people, this is where it becomes an issue because they're the kind of things that do trigger people. And that's where trading high impact news, people think, oh, look what I can win, or I'll try and make that back. So there's still the element of having to remain emotionally stable when you are losing that money in minutes.
Is it
But like I
easier
say,
to remain emotionally stable because you rely on the system? Like because you're rooted in your belief in the system, you don't let that like, oh my God, I got stopped out. I got to jump back in. The Black Shirt Club has seen unprecedented success in the last couple of months, and I can't tell you exactly why. I'm being honest. Is it the coaching? Me and our coaches are getting better. Is it the markets? Maybe the markets are easier to trade. Is it the funding challenges? Or maybe it's a community environment that we cultivate in the Black Shirt Club. Maybe it's a combination of all of those things. Whatever it is, the Black Shirt Club traders are crushing it. We've had multiple 5-figure payouts, multiple 6-figure payouts, and more importantly than that, multiple people passing their first funding challenge ever after spinning their wheels on their own for so long. So if that sounds like you and you want to be a part of the people that are getting paid out, what you need to do is get yourself around like-minded traders. You need to be coached and held accountable to a higher standard. That's what we do in the Black Shirt Club. So use the link down below, flying in over my head, book a free call with me, and let's see if you're a good fit. It is not for everybody, and I'm very clear about that because I only want to help people that I really feel like I can make a positive impact on. So book a call. I appreciate you for being a listener. Now let's get back to the show.
it does not phase me one bit. Which is, but that a big turning because like you say, it's a stop. As long as I execute, my job is to execute trades, take trades where my signals present, manage the risk appropriately and walk away. If I've done that, I've done my job.
So when you look at somebody like me, who's much more discretionary in a way, what does it make you think? Like, do you look at it and you say, well, that works for him because it's his personality, it fits his characteristics, and I'm different than him? Like, how did you know? Because I'm thinking for the listener, some of the people are going to be thinking, I don't know if I'm a more systematic or if I'm a more discretionary guy.
Yes, good question. Because, like you say, we've got such a diverse group of traders in the
Yeah.
group, which I honestly think is one of the biggest reason why we've had so much success this year, is because I think we've become better coaches, but we are way more understanding and accepting of different styles and personalities. But that's probably for a little bit later down in this podcast. Um, how did I? So just repeat the. How do I recognize that it
When
was
you
from?
see someone like me, that's just, and we're
Yeah.
going to talk about the success of the Black Shirt Club today for sure. When you see someone like me who is more discretionary, and I know myself, if I was to trade that way, I would handle it much differently than you. How did you like identify it? I guess because I'm putting myself in the shoes of the listener, and the listener might be thinking, I don't know if I'm systematic or if I'm discretionary. So what could be some of the identifiers of that?
Yeah. So I think for me, one of the biggest identifiers was just kind of, I not necessarily disagreed with like certain things, but like I didn't see things the same way that you or others do see things. I have to be very black and white. I always have been that way. And like I say, I'm very numbers focused. I always have been from a data perspective. And I struggled personally with, should I be doing this at this point or should I be doing that at this point? I was kind of almost looking for certainty, although certainty does not exist in trading whatsoever. It can't, right? It's all based on probabilities. But I struggled with looking back at my journal and my trades from the last quarter or last month or whatever, and understanding whether it was the system, that because of the system I was taking a loss, or was it because of a decision that I had made? And that troubled me. So again, just trying to resolve the things that crop up or the questions that come up in journals. How do I fix them? And the solution for me was to move to that more sort of discretionary, because at least by that point, I've really removed a lot of the questioning. But in regards to you doing it and James and Evan and people trading discretionary, I accept that we're just now different people and different styles of trading. Like if I think about, I like running, but I don't run fast. I hate running fast. I like running slow. Some people like running fast. They go out for a quick 2K, 5K, whatever it may be. And it's just like, yeah, how are you different as personalities? Like, I feel like I'm quite detailed, methodical. When I do my journals, they're different. I plan things a lot as well. And I play things over in my head of 100 different variations before I do it. I don't make rash decisions. I don't make bold decisions in life. I think things through before I do them a lot of the time. Certainly now as I'm getting older, didn't so much back in the day as a kid.
It's true.
That got me in some trouble.
Yep.
So yeah, I just basically just I like learning from other people. So how are we different? And just observing other people. Are you that same kind of person? And if you are, then maybe if they're succeeding, you might be able to mirror their trading style. If
100%.
you're different, maybe it requires a different style of trading.
100%. No, that is a good answer because I think I didn't know how discretionary I was. And I tried to trade very systematic in the beginning, even building the A1 and the A2 and that stuff. Like as we built those strategies, they are systematic in a way, maybe almost too much so for me. And I feel like that's kind of where now I'm not trading those as much and it's moved away. And now I'm doing a lot, I'm doing really well. So I think you almost, the only other thing I would add is like you almost want to try one of them as a listener here, everybody, and see if it works for you. Great. And if it doesn't, don't be afraid to go find a mentor, find somebody that trades like you and try the other thing. Try the discretionary if you tried the systematic first, like I did. Try the opposite if it didn't work. So I think that would be really good advice too. Let's talk about the success from the Black Shirt Club since you mentioned it, Tom. I mean, it is pretty unbelievable what we've seen. You know, as you're talking, bro, before I even ask you the question, I was just thinking about it. I'm like, imagine a couple of years ago. Like, I think back to when I dropped out of school and my dad was like, what the fuck are you doing, bro? And trading sucked at that point. Didn't see it becoming what it is today for us. I didn't know it would be this. I knew I would be successful in it. I was very driven. but like I didn't know what it would look like. And now to have a business that you and I are coaching traders, they're paying us a good amount of money to be in this mentorship group, and it's working. Like they're not paying and leaving and calling us scammers. They're not paying and leaving and calling us. They want to stay. They want to pay for the year. Like Mark paid for the year. You know what I'm saying? So it's like some of these guys see the value in it, which makes me look back on it and say, like, it's crazy. Like, because how many people would start something like this and it wouldn't work? A lot. And now Mark's about to take a 40K payout. You just took a couple thousand out. I took a couple thousand out of Top Step a few months ago. Zach's about to take a payout. I mean, you can go down the list, not just on the payout side, but on the passing their first challenge. That was, I said this the other day in a sales call to one of the new guys. I think it was to your guy, Mark, the other Mark. I said to him, I was like, the group used to be focused on, hey man, let's just pass your challenge. Hey man, let's just get you past the challenge. If you and me got somebody across, we were like, fuck yeah, this is amazing. That was a big deal. Now it's like, good, pass the challenge in the first month because we're going to be, this group is basically all funded traders focused on scaling and getting paid out. Have you noticed that transition? And what do you think attributes that to? You mentioned good coaching. I think that's a part of it, but this is maybe also where we should talk about CFDs versus futures too.
Yeah, I think there's a number of reasons for the recent success, and it has been sort of a little bit parabolic over the last 3 or 4 months. I feel like it's gone exponential since we very first started. Yeah. We've now had over like 115 people come through this mentorship program, which is crazy when you look back at that and you think, and I look back through some of the spreadsheets and the early TIPs that we created back in the day. And like we were tracking people's stats and all the things that we were doing as
habits,
coaches,
everything.
And like, I just feel that we've all evolved, and also the style of trading or the way that we coach has become a lot different. Like now we do these big group sessions, which is really good because we are different, right? We're not trying to create carbon copy traders of you, me, James. We are now extracting the strengths out of the people that come into them, and we're getting way better and more efficient at recognizing them because we've had so many people come through. We can see the bad habits that they've got straight away. We can put solutions in place for their issues straight away. And so that's obviously compounded because we've gone through that. Like you think 115 people at a 12 to 16 week program, plus the people that stop on in the elite, that is a lot of coaching calls and a lot of data for us to say, hey, we've seen this pattern. We know exactly what you're going to do, why you're going to do it. Here's the solution. Now let's move on to the next issue. So that's the big one. And then I do think the futures, like we've not slept on it, but if you don't know something, you don't know. Right. We got forced, the hand got forced, especially you guys in the US, your hand did get forced with having to move into futures. And I'm a great believer in that. At the time, some like say, I don't know, you lose a job or you get divorced or whatever, it's like, oh, it's the worst thing in the world. But if you were to ask somebody like 3, 4, 5 years down the line, how often do you hear somebody say it was the best thing that ever happened? Right? They've now got somebody, they've met their soulmate, or they've got a job that, like we've said, pays twice as much for half the amount of work. So at the time, something can be really bad, but actually later down the line, it's the best thing that ever happened. And I feel like that's kind of what's happened here with like the CFD forcing you in the US out. And now it's led us to move into futures, and we're like, different ball game. Now we can start to see that rise. And I think it has helped us all a lot.
What's up, guys? Before we keep going, a quick sponsorship shout out to TradeZella. They've been a sponsor for months now, and instead of just offering one discount code on your monthly membership, they've decided to kick the door down and offer you a 20% discount if you sign up for the year. So use the link down in the description. The code is ASFX20. That's going to save you 20% on your yearly membership, and that's going to give you everything you need so you can actually start making money this year. If you want 2024 into 2025 to be your most profitable year ever, you're going to have to track your trades. You're going to have to track your good ones and your bad ones, and you're going to want to learn from those bad ones by studying the data behind them. What days are you making the most money? What times of day are you making the most money? What assets are you trading best on? What are you doing with your winners? Are you holding them long enough? What about your losers? All of that is answered for you with TradeZella. So use the link and the codes down in the description. Thank you to TradeZella. Appreciate y'all. Love you, Umar. Now let's get back to the episode. I agree. I mean, when was the last time you thought about my Forex funds? When was the last time you even heard that name? You know what I'm saying? And that was all we did for a year or two. You know what I mean?
We all fell foul of the MFF situation. And like you say, you learn from your mistakes. Yeah, it hurt at the time, but yeah, you learn and you move on. And thankfully, we're still here now. So yeah,
Adapt or die. That's us, man. I think even Ryan, one of the guys in the Black Shirt Club, said, um, he was like, since I joined, which was like 3 months ago, he's like, we've changed already so much. Like we're always adapting, always taking in. And then, like you said, as a group, we kind of share, collaborate, take what you like, take what you don't like, that kind of thing. And I think that is a conducive environment for success. But it is crazy. Like you said, it's parabolic to see how many people are now passing challenges. It was like one person, two people, three people, maybe back in the day per month, per 2 months, something like that. Now it's like every couple of days, someone is passing their first one or someone is adding a combine and now they're getting a payout and we're seeing that grow. I wonder how much do you think it has to do specifically with the fact that the CFD challenges, some of them are two phase and these futures ones are not two phase. So like, what are the big things that stand out to you, especially because you've been funded now and paid out with 3 different companies, basically? What are the standouts from CFDs versus futures that make it easier? Cost of combine, the
yeah.
challenge
So I think there's a
phases.
number of reasons. Firstly, having to make, so I know we're talking a bit more monetary than we used to, but we'll just talk in percentages for the sake of this. Is like it's 6%. You have to make 6% basically to pass a combine, regardless of the
Right.
firm that you're on.
Right.
You have to make
Right.
6%. Whereas CFD firms, you have to make 8%, and then you have to make 5%. So already it's 40% easy or 60% easier because you have to
Right.
just make less targets from a
Right.
profit perspective. So that's a big one. And then I think the biggest thing, or one of the big contributors, is again, like you mentioned, cost. So 100K for a CFD could have been anything from like at best $400 to like $600, depending on the firm. And whereas now you can get 100K for like $50, $60. So that brings a whole new mindset into the way that you can approach it, in the fact that now a combine is not $500, it's now a $50, $60 bet, trade, whatever you want to make it. And you can afford to be more aggressive, I feel. And I feel like as a group, we've also changed our style, because we were always of the sort of the belief that you trade sensibly, you manage risk. We've always been a risk first group. And we've always believed that anywhere between like 2 to 4% is enough to make a comfortable living as a trader, which it is when you get size. So we've always traded like that. And I think certainly the biggest difference for me is I'm trading much more aggressively and treating the future side and passing combines is a completely different skill to like growing an account and a track record. So I
100%.
think understanding the difference between the two is a big one. And because we're understanding it better, and we're showing that being aggressive can pay off in this format, and then the important bit is flicking the switch and then growing the account once you've got funded. I think that's a big contributor. So for me, it's easier to pass, cheaper to pass, and a change in trading styles to be more aggressive are the big three, I think, that
Do you
we're
think that
now doing as a group.
yeah, I agree with all those three. Do you think that it has to do with the challenges being cheaper, like you said, so they buy more, even if you fail a couple, because you can afford to buy more versus what the cost of one CFD challenge is, then you run through them faster? Are you learning faster? Or because it's not like the guys are getting lucky. Like I wouldn't say our guys are getting lucky because they're not losing these accounts once they're funded. They're getting payouts. So I can't chalk it up to luck, but can we chalk it up to law of numbers of like, yeah, if I give you 10 challenges, you're much more likely to pass one and get a payout versus one?
Yeah, I think so. And that's certainly the way that I've approached it, is very much more a numbers game.
Yeah.
And because they are so much more cheaper, I know I'm going to fail challenges, but I'm happy to do that. Right? If I'm buying 20 challenges at, well, up to, like I said, up to $1,000, if you want a 300K account on CFD firms, you're going to be paying upwards of $1,000. So you're going to invest a lot of money to try and get 3, maybe 4 of them accounts. It's so much easier, especially when some of these futures firms are running some crazy deals like Apex, $19 for a 50K account. I can't go down the local pub and buy a round for $19. That's 15 quid in the UK. I
I
cannot buy
know.
3 pints down the local pub for 15 quid, but I
It's
can get my
crazy.
hands on an account that's 50K with obviously the drawdown, etc. So for me, I don't mind saying, yeah, do you know what? I'm going to try and YOLO some of these accounts. But law of averages says once I've got the accounts, I know I can grow the account and get payouts. So
100%.
as long as I'm making more than
Spending
as long as I'm getting
the
paid
bottom
out more
line.
than I'm investing, it's a
Yeah.
win-win for me.
It's an entrepreneurial mindset, right?
Correct.
What's the bottom line? What's the actual
Yeah.
financial bottom line? So
Yeah.
let's go into this. Give me three, Tom, three tips for people that are trying to pass their first combine as a futures trader. And of course, they're probably applicable to CFD traders as well. But specifically because you've passed with three different futures companies, what would be your top three tips to get funded?
So my top 3 tips to get funded: start trading futures, because we've seen a lot more people get past than CFDs. So if you are listening to this and you are still trading CFDs, don't remain stubborn and continue down the CFD route. I would recommend making that switch. Stay open-minded and make the switch would be number one. Find yourself a group that deploy strategies with edge that are actually going to help you pass, and that you can actually see physical evidence and proof that it works, is tip number 2. Because a lot of people, I think, will just buy these because, let's be honest, that's who you're competing. People would rather buy 10 challenges for $500 than spend $500 learning how to trade responsibly, which I wouldn't recommend. Always buy your education first and learn how others are doing it. So that would be tip number 2. And then tip number 3 is a big one, and it took me a long time to do it, is don't be afraid to fail.
Go more into that. What do you do to overcome failure? That's a big roadblock for a lot of people. They are afraid to lose. They're afraid that they'll be judged for failure. They think it's going to hold them back from their goals. When in reality, if you embrace failure and find lessons, what do? You move closer to your goal, actually. So for
Yeah.
you, get vulnerable here. What did you do, Tom, to overcome the fear of failure?
Fail more. Just honestly, just fail
That's
more.
a good answer. That is the answer.
The more you fail and the more you journal and the more you reflect on it, I feel like the more you learn about failing. And like I said, I feel like I'm good at failing in the right way. And if I take good trades and I follow my rules, I do feel like I'm really good at losing. A lot of that comes from the sports betting and things like that from that past. But I now know what doesn't work for me, which is the important thing. So I know that YOLOing accounts, getting on the 1 minute, oversizing, revenge trading, that doesn't work for me. That does lead to me then buying more challenges and just going off the rails and spiraling and things like that. So yeah, but it has to be failing more and just accepting. Don't go into like the gambling and like just losing money you can't afford to lose, because I think a lot of people will do that. They see it as a path to get rich quick, which it absolutely isn't. So yeah, I think that would be the deep dive on that one.
Are there any major pros to futures that you would tell the guys that are trading CFDs to say, like, hey man, if you're struggling because spread or whatever keeps screwing you up, come to futures, it won't be a problem? Or any tips you would give to the guys like that? Because I'm sure there's a couple of listeners that are sticking with CFDs just because they don't want to change. And also we could say you don't have to do one or the other, right? You can do both. You're trading both.
Yeah, so I think that's, again, it all depends on where you are in the world, right? At the minute, I still do trade both because I'm lucky that I have the opportunity to do that. So I can still trade CFDs and I can still trade futures. So if you have that opportunity, then use that to the most of your ability. But for me personally, I have found more success making that transition. So if you haven't made that transition to futures, I would, again, stay open-minded, give it a go. What have you got to lose for $19 to buy an account? Give it a try. Like there's only upside, really. Yep. What's 15 quid? Like I said, you can't buy around for that. So you've got nothing to lose by trying. Maybe 100%. This is what helps you. Maybe trying systematic, maybe trying discretionary. Trying these different things is what you're going to find a new path for your trading career to go down. And who knows which path is going to lead you to being consistently profitable if you don't try it. I know. And I think this is, again, like that thing that you hear at the start of your journey. Everyone's like, right, don't diversify, don't do everything, don't do this, don't do that. But I think at the start of your trading career, you do have to at least
100%.
try these different things. And then later down the line, as you get in, you're going to start to filter out the noise. But at the start, try a bit of everything.
100%. My dad always used to say, if you don't know what you want to do for your career, try stuff and figure out what not to do.
Yeah.
Eventually you'll come to what you like to do. You just have to be open-minded to not being like, oh, I tried one thing, so I'm not going to try anything else in this career field. Oh, I tried discretionary trading and I hated it, so I'm done. No, try systematic trading. Try algorithmic trading. There's a million other ways.
Scalping, high-term day trading, fucking swing trading.
100%. I want to chime in on that just for a second, because I think the futures market itself, being a centralized exchange, has a lot of opportunity for growth for those of us that come from a decentralized marketplace. Like this bookmap thing that you've seen me using for the last couple of weeks, it's a game changer. It really is. To have the ability, like you said, to see the order flow, I think is a huge pro that you just don't get as a CFD trader, which is tough. Now, we've made videos for years about our payouts from CFD firms. We've been able to take money out of those firms, but if it's easy, I want it. If it's not easy, I don't want it. So I'm looking for that path of least resistance that plays to my strengths. And I think futures does that. And that's why I've kind of dived deep with Top Step, and I'm enjoying it. What do you think about the differences between the firms? Let's talk about that for a few minutes. Apex, Top Step, My Funded Futures. First thing we should say, we are not going to badmouth, like I said, anybody directly, but we're going to speak from honest opinion and what we're hearing from our group. Apex, we should start off by saying, is a little slow on their payouts. I mean, it's not arguable. When you look at like our sponsor, Top One, they're a CFD firm. They pay out within an hour. Like you can get your CFD payout in an hour or less. That's crazy. Then with Apex, tell everybody kind of what you're going through right now and what you're
so
thinking.
This is it, right? So like you say, you see on social media, these CFD firms, somebody got paid out within 8 minutes the other day.
Yeah.
From requesting it to 8 minutes, right? And in the world that we live in right now, why shouldn't that be the case? Everything is getting quicker and quicker. I can get something delivered from Amazon the next day,
in like 20 minutes. Yeah,
in the same day now, right? So that's the world that we are living in. So I requested a payout on the 19th of June. It is now the 3rd of July that we're recording this. So obviously when it comes out. So yes, my payout has been approved, but I've still not had that cash land in my account over 2 weeks now. So that's 14 days.
That's crazy, bro. That's a kick in the balls.
14 days.
Really
I know I'm in international pay, but we still managed to get international payments within minutes.
I haven't missed a payday to you in ever.
Yeah, so. Exactly. So the technology is there. So that is a huge frustration. There's no denying it, right? That is a massive frustration.
Balance it out with a pro. What's a big pro of Apex? We're probably going to say 20 accounts. You can copy to a bunch of accounts.
Yeah, like that's the easy one, isn't it? Right? It's great scalability. It gives you a great opportunity. Like we've just seen, Mark's got 20 accounts. He's just triggered a 40K payout. So yeah, that's huge. It's a great opportunity. So for me, again, like I said, lucky that we've got these opportunities, and that yes, there are harder rules in place for different firms, and some are not as kind to the trader as others, but that's just part of the game, right? We have to suck it up as traders. We have to play by their rules, and ultimately, as long as it puts money in our pockets, so be it. So yeah, that is a pro that you can have 20 accounts.
On the trailing drawdown thing, let's talk about that.
Yeah, Con, that's for me, it's a big one. You have to understand how it works. I don't think a lot of people actually do understand. And yeah, I fell foul of it in the first.
Well, I think I just said it wrong too, didn't I? It's not trailing draw. It's an equity trailing drawdown, right? That's what you have to say correctly.
Yeah. So like if you trade for like 3, 4, 5, 6 hour trades, you can't let them come back down to your break even point, or because you're potentially going to get stopped out unless you're going with really small risk. So you have to definitely understand how that works. You have to understand your trading style. Like I said, if you're trying to risk $500 on a 50K to try and get 6R and it goes up 5R and then comes back down, you're done.
Yep. It's crazy, which is, again, not to badmouth, but that is not a rule that is in place for the trader. That is a rule to make sure they don't have to pay you out as often. Has to be. That's all.
Yeah.
It's a roadblock.
I'm going to be honest with some of the background in sports betting. I don't see many of these firms much different to the bookmakers in that ultimately winning traders are taking off their bottom line. if they have a model that relies on people failing. If they
Which
rely
is
on
sports betting, right?
challenges,
That's what you're saying. Sports betting is the same thing. It relies on someone failing and
yeah,
paying money and losing, and they use that money to pay
and
the people
bookies
out.
are able to ban winning bettors
Yep.
like that with
Weren't you
next to
banned
no.
back in the day? You were banned from a couple of different ones.
From certainly online. Actually, this morning I've been told in a shop that I'm not allowed to take prices on certain markets as well. So yeah, it's a game of cat and mouse. It is a game of cat and mouse, but I love the chase.
I
And
know. I know.
that's what keeps me coming back.
I
But
know.
yeah, it is a little bit similar with some of these firms, and you can see why people that are withdrawing 40k, you're taking 40k off their bottom line. They're going to investigate it. They're going to see if there's a reason that they can keep it. If you've dollar cost averaged into a trade once, well, that's another rule that we can talk about as a con. They're gonna do everything they can to keep the money in their pocket
Banned.
rather than yours.
Yep. Well, the dollar cost averaging thing is important to talk about too. But like, yeah, you want to not have to pay out a lot. I get that from their side of the business model. But then why are you advertising it with saying how much money you've paid out other than to suck people in? That is how you
Exactly.
suck people in.
Of course
So
it is.
the dollar cost averaging rule is where if you add into a loser more than once, you can't get a payout, right? Is that basically they will deny the payout?
Yeah, because you're
Wow.
adding to losers, and it's
Which is a
seen as
common trading strategy. People will piece in small and add in to get to a full position
yeah.
size
So for
sometimes.
me, as like a mean of some, or one of the strategies I trade is mean reversion. Ultimately, the further you move away from the mean, the better EV you've got. So really, as the further we move away, I want to be sizing bigger as we move further away because my edge is getting bigger.
Right.
So yeah, that's something that you have to adapt and understand and learn. But I think a lot of the times, you need to take the time to sit down and read these rules and understand them fully,
Yep.
which a lot of people don't do. It's surprising.
Nope.
And you are
It's
ultimately
not.
going into a contract with these firms, so you want to understand it inside and out.
So what's up with my funded futures? Because you're funded with them. I got Zach, I think, is funded with them. They're probably the least common of the three, the big three right now. And of course, there's going to be more firms, bro. There's Alpha Capital's doing one, Funded Ticks is doing. They're coming. There's competition coming. But what do you think of my funded futures? Like, are they a middle ground? Are they because I see them changing rules right now sometimes. Like, are they trying to figure it out? What is your opinion on that?
Yeah, they are. So honestly, the one that I don't trade as often, and the only reason is because it's on Ninja Trader, and I struggle with that platform.
Yeah,
I do
yeah.
to get to grips when I've got Top Step X and Tradeovate, excuse me,
Which are
which I
clean.
feel are easier platforms with somebody that is managing upwards of like 30 accounts. That one kind of just goes on the back seat a little bit,
Yeah.
because I've got futures copiers, I've got CFD copiers, and I've not got that on any copiers. So yeah, I would definitely say that they are a middle ground. I know their challenges are quite pricey compared to the rest. They don't do any sales or anything like that. So they're definitely the one that I've got the least experience with out of the them futures firms. But I've got nothing bad to say about them compared to some.
No, definitely. And I mean, then you flip it to Top Step. Top Step, they have their own platform, Top Step X. I think that's a pro. I would
I
say
really
some
like it.
people, me too. I think, and they're going to continue to make it better. It's a smart thing to have your own platform. If I was a prop firm, I would do the same thing. Call Trading View, make an integration. That was a smart move. I
Yeah.
kind of also like that they're not doing 10 and just copying to Apex on the how many accounts you can have that are funded. And I also think the big pro from my perspective is the community with Top Step. Like they do the leaderboard, they do live accounts if you're trading really well, and they want their live traders to actually take the Series 3. And in America, I don't know if it's a thing for you guys, but Series 3 is like a designation test that you take. You have to get sponsored and you have to get, certified to take it and everything, pay and study and blah, blah, blah. But that makes you a real trader, a professional trader. So Top Step kind of pushes that as their model. And that's why Michael, the CEO, gets in some Twitter beef with Matt, the CEO of the other firm, online because they're like,
He's
"Well, we
surely in line for some sort of legal suit at some point. That Twitter account.
I think Michael is extremely smart, and I think he knows that, and I think he probably gets it all green lighted and checked before he goes crazy, and he watches what he says carefully. But he also wants the attention because he sees how much volume Apex is doing, and yeah, I mean, you don't want to copy them, but like on a professional side, it's hard to say that that Top Step is not the most professional futures firm right now.
Yeah, so
What do you
that's the
think?
bit that I really like. I do like about their model is that a there's stages to their trading floor or career or whatever you want to call it, in that once you've got to your combine and that they see that you can trade properly and you're managing risk, that they do then put you into a live account, which is much more down like that the older school brick and mortar prop firm, which actually has some sort of scalability there. I imagine they can then sort of copy you, they can use their account, and they can grow their business, not just from people failing. That business model then allows them to grow capital without having failing traders, which I think is really, really good. And I think a lot of people will try and go that model, but I presume it's pretty sophisticated because we've not seen it from any other firm at the minute.
Correct.
So yeah, I think that's a huge pro
I also
from
like
them
the
as
house
well, because
account.
there's an there's a bigger goal towards you trading with them. It's not necessarily just about trying to get as much cash out of them as you can, put it in your pocket, and then sail off into the sunset. I feel that could lead to something bigger and better.
Yep. I mean, their house account is a cool idea that we talked about doing at ASFX TV, having all four of us have the house account. We've all put some money into it and we all take turns trading it. That is cool. And
That'd be
that's
cool.
live.
It would.
It's
It'd be
live
fun.
capital. It's in the market. You can tell it's a live account. You know what I mean? So, what do you, not to play one side of Top Step. So let's look at the cons. There's been rumors and bubbling that Top Step X controls the back end data of everything. Do you think that that's a big con? Do you think it's possible? What are your thoughts of that? Where like they can manipulate pricing a little bit or manipulate things because it's still simulated markets. Do you think that that's something to be concerned with? Like, do you think it's like, don't worry about it. Just keep getting payouts, shut up, trade.
It's not so. All of these firms can do it, right? We've seen
Right.
so many accusations from a CFD firm to like, that's not nothing new, I would say, across any of these. So yeah. Is it of a concern that people can do it if there's hard evidence to claim back any of it up? But it would, like I said, these firms, it wouldn't surprise me if any of them are doing anything to make people fail, whether that's not Top Step or my Forex funds. Like, I'm sure there's some shady goings on that we're not privy to all over the place, right? So I
Well, and
don't
I
think
mean,
that's
we've already
necessarily a
seen it.
Top Step thing.
Right. So we already know that
But
there's always going to be something, but that's where competition will drive excellence, right? Like as other firms come in, it will force the firms to be more legitimate, more professional, to attract the better traders. If you want to be the kind of firm that attracts the guys that'll buy a bunch of accounts and try to arbitrage you and get one over on you as a firm, then yeah, that'll continue to happen if you attract that type of a client because of your pricing and the model that you have and everything. But if you go in the direction that Top Step and some of the other firms are going, you'll attract a more professional trader. That's
well,
what I think.
exactly. Like if they can build a stable of, which they're obviously trying to do, I'd love to know what their end goal is with Top Step, with all these live traders I'm putting through. They're going to be able to create a really good stable of traders that they
Right.
can maybe fund, and maybe they can build their own sort of hedge fund from. They can attract investors and say, look, we've got these 50 traders that have got a track record of making money in the live account. These are what they've returned. If we manage risk and we give them more capital, we can scale up and we can do this. And who knows where that goes? I think that is almost like the sky's the
Bro, that
limit
sounds like
with that.
you call up the guys in Dubai and you say, "Hey, we need some of that oil money over here,
Yeah.
and we can run it up." You know what I'm saying?
Yeah. So I think it's a huge pro. And like I say, I'd love to know what the end goal is. I'm sure, like you said, Michael's a very clever guy. So I'm sure he's got his eyes set on something pretty big. Because what
Yep.
they've built so far is pretty cool. Yeah. And I think for us, we just continue to use the opportunities that are out there, good, bad, and indifferent, as long as like you say, an entrepreneur mindset. We're trying to just put money in our pockets. But we've said this for a long time, that competition is healthy because it does make things get better for the traders.
Yep.
But because we're in the infancy of this, I feel we are going to have to weather a few storms like we did with the MFF situation and things like that. So it's not always going to be sunshine and rainbows.
Well, and Top Step has been around for a long time, the longest, right?
Yeah.
And what I like about them too, not to be just fanboying over Top Step, but it's just what I know best. You're talking to guys that were really on the floor of the pits. There's no way to fake it. The videos are there. They got the jackets.
You
They
mean they're
were
not
there.
16-year-olds in their fucking mum's bedroom?
That's what I'm saying. So I think
Man.
that's another big pro to me. You know what I mean? And
Yeah.
when Top Step has over 100 employees, if you have a company of over 100 employees, and Michael talked about this in the podcast I did, you have to have leadership teams in place. Like imagine if we at ASFX had 100 employees and I didn't hire other people to run stuff and I was trying to do it all. You would never
You can't
grow.
do it.
So Michael has these people in place in leadership to lead the company where he gets to just innovate and think about how to make this better. So you're talking to the guy who is calling himself the godfather of the prop firms, the first one. He said FTMO guys bought challenges from Top Step in 2015 and he knows them super well. So like it's what he says. So you would hope that he's innovating. I'm hoping that we have him back on the podcast next year and he tells us about some new thing that's coming and and I have no idea what it would be, to be honest. But I
Well,
know that a big company is always innovating. They're trying to.
of course they are. Well, you've seen the changes that they've done this year, going from 3 to 5 and Top Step X, and there's plenty of stuff in
Mobile,
the
you can
pipeline, I imagine.
trade on the phones now. You can do so
Yeah.
much. I mean, even that transition, like I mean, again, last Top Step point maybe, but like they handled the transition to Top Step X and making all those assets available, the Forex futures, all that commodity, they seamlessly, like there was no one on the internet saying this sucks, everybody loves it. So it's like, that's a good sign. You know what I mean? Versus some of the firms that are changing rules now, adding a consistency rule, making it harder to get paid out. Top Step's not really doing that right now, which makes me feel comfortable with them. But you know what? I also want the bragging rights, to be honest, Tom. I would be lying if I said my ego didn't want for, even if I'm on the leaderboard for a day. That's all I need. It's just once to make it on there and say, like, look, I did it. I took enough payouts. I grew enough accounts. I made it to the leaderboard. And I think that would help our business. You know what I mean? Not that we're already getting a lot of good overflow from them right now, but like, I think that would be super cool. And none of the other firms really, have leaders boards that are taking that seriously. Some of the CFD firms used to do that, just kind of fell apart, I feel like, and dude, we're not even talking about like, I heard every CFD firm is facing some drama right now, except Top One. Top One is the only one that pays out. It doesn't have any drama. That's why I've continued to allow them to be the sponsor of the show because no beef. No beef. Funded Engineer, I heard, is taking some heat, bro. I mean, everybody, even FTMO changed the language on their website. So, like you said, changes, infancy in a way for this industry. But you know what's going to be cool? When Rupert and Leo are older and they're 20, 30 years old, I think this manage your own money, CFD, prop firm, futures trading thing is going to be massive. I think they'll consider doing this instead of investing with Fidelity or Charles Schwab and just buying and holding. They'll be like, no, I'll manage my own money. Because at that point, think about how this industry could boom. You know what I mean? And Owanda actually put out an article about that they are thinking about starting their own version of this because they see it is taking market share from the traditional brokerage firms, you know?
I'm not surprised by that.
Yeah. Yeah.
And that's if they've gone through an education system that tells them to invest and manage money and save and bits and bobs. There's because in the UK there's definitely none of that. So hopefully it relies on parents like me and you to at least pass that wisdom down to the future generation. So yeah, hopefully there is something in place for the kids when they do grow up. And I think that's obviously for both of us. It's a big reason why we do what we do, right? It's for the kids and for the future of them.
I saw the video on Instagram today. It was an old dude drinking a Coors Light, and it said the average lifespan is 78. So half of 70, like you basically was saying your life isn't halfway done at 50. Your life is halfway done around 40 because the average person dies at 80. So they sold you on this idea of buy and hold investments until you're 55, and then you can take it out tax free. Well, bro, enjoy it for 10 years, buddy, 15 years, and then you're done. So this idea of like that buy and hold is changing. You still got to do it, a little bit, but I think people want to have control over their own money, and this space allows for people to do that. So let's do this, Tom, to come to a full circle here. We talked about the Black Shirt Club. We've talked about your success with the futures firms. What do you think is going to, what do you think the next year is going to look like for you? What kind of goals should someone that's listening to this set for themselves as they pass their first couple of combines, challenges? They start to get some payouts. How do you set proper goals? Because you never know what you can achieve in a short period of time. So what is your approach to, the end of 2024 and then the beginning of 2025? What are we going to be looking for from you?
So for me personally now, I feel like I've got a reasonable level of combine or XFAs passed now across the three firms is to stack some payouts. I want to see how robust some of these firms are and if they're making the relevant changes and look to scale, get max allocation with all of them, and then focus on just trying to stack some cash and scale my trading business. And if more firms do appear, that's fine. We'll look to take advantage. I'm going to continue to use CFDs and futures whilst the opportunities there. But for me now, I feel like I'm in a place where I'm settled on my style of trading. Now it's about scaling the input to my cash and my bank balance and my own account. So that's what I'm going to be focusing on from here on out, is just putting money in my pocket, trading XFAs, trading PAs, and just trying to extract as much as I can and reinvest it
Fucking
into other projects.
Crush
That's
it.
it.
Yeah.
That's
What are we doing? What are we doing about the golf tournament, Tom?
Ooh, what, our golf tournament?
I think so. That's what I'm saying here. Yeah, people, I get messages once or twice a week. When's the next seminar? When's
We
this? And
should
I'm
do
like,
it. Like, if we're doing it, it's got to be in America because it's too cold in the UK unless we do it in the summer.
yeah.
But yeah, I think we've got plenty. We could do a Ryder Cup. We could do, I don't know, East versus West, or yeah, I
And
think
like,
it'd be.
I-
I think
I'd
we
be
could
down
do
to
a
do it
great
and
trip.
make no money. Like we charge at cost. Just get the pictures, get the people
It'd be
together. I don't think
amazing.
it'd be so much fun. You know what I mean? We do it at a fun golf course where we could have everybody bring their families and stay for a couple days.
Get Jared Tenner to come.
Oh,
Great,
no,
great at
no, no,
both
bro.
parts.
He's too good. He actually is too good at golf, bro. No, but we could invite Jared, we could invite Crudelli. A lot of traders golf. You know, we could try to pull in as many people as we know and see what happens.
I think it'd be brilliant. I'd love to do a golf trip and a golf tour with traders because, like
You
you said, I
know,
think there's so many comparisons between the two as well.
oh yeah, and like the hanging out afterwards, having drinks, eating, the conversations, who you'll meet at an event like that over a couple of days is incredible. And like honestly, the best way to do it, because I don't want to do all the work for it, is I probably should just call an event planner, Google it, figure out how to find somebody. Maybe somebody listening to this will know someone to refer me to, someone that can just do it and just give me the number of how much we need to sell the spots for. And then I'll tell everybody this is the number to pay the party planner, to pay the venue, to pay for your room, to pay for your rounds. It's this much per person. Pay it. We all lock in. We could build teams and we could have a fucking Ryder Cup, international style Ryder Cup. Because I'm sure we'll have people not just from the UK that want to come. We'll have people from France. We'll have people from wherever come. So we'll be able to pair people up. We could do it based on handicap. You know what I'm saying? I can lead the what's below amateur because I'm still below amateur. So I'm like, I'll lead the D's, the degen group. You can lead the professional group. For everybody listening, Tom had club records, okay, until he gave up golf because he got frustrated or he hated it or whatever.
Yeah,
right, Tom?
correct.
But Tom had club records, just so you know. And James shot a 79 last week or 74, something good.
Did he?
Yeah. Yeah. So
That's
like
not bad for a bald guy.
that's not bad for a bald guy, bro. So no, I think the Ryder Cup style event would be so much fun. So what? It's July now. I guess a really good time to do it would be like wintertime UK time because you'd come to Florida or you come somewhere warm and it's not super hot where you're sweating your ass off. Like right now, it's even middle, like now it's too hot to play outside. I mean, I will still, but everybody else would complain. You would be sweating your balls off, bro. You guys
That's
would not be
fine.
used to
I'd
the
rather sweat
humidity.
my balls off than shiver my tits off.
Well, you guys played when you were sick when we were in London, right? You and James played in the
Yeah,
cold.
yeah, we did. It was freezing. Yeah, we did in December in London.
Ball rolls differently, ball travels differently, swing speed is different because it's cold. It's all different there. Here, we'll take our shoes off. We'll have a good time.
Yeah, no, there's none of that. Like you're wrapped up in like 5 layers. You got your mittens on. You got your hats on. You can barely swing past your
Yeah, because
past
the
your
jacket and
shoulders.
shit.
Yeah,
Yeah,
it's
yeah,
terrible.
yeah. Yeah. So, all right, everybody listening, if you want the golf tournament to happen, let us know. We'll set it up for next year. We'll make it a 2025 thing. I think it'd be fun. We just need to got to have the time to plan something like that. It's not easy. You know what I mean? It's coordinating with the hotel, letting people know what's going on. So, but it's not difficult either. It can be done.
Yeah, it'd be class.
Okay. All right, everybody. Tom, this has been great. I got a bunch of notes here. This is going to be some good clips. I really appreciate you sharing some insights into what's working for you, kind of how you've transitioned over the last couple of months, because I think that's what people take the most value from these conversations. You know, they like hearing us shoot the shit, but they also want to be able to take something from this of like, what is Tom doing to evolve and to continue to grow? How can I take from that and apply it into my own trading? So I really appreciate you, Tom. For everybody listening, make sure you tune in. ASFX TV schedule has changed. Tom is now streaming in the New York session. This is a big deal. We cut London session completely. It's all New York session. So like on Wednesdays now, there's 4 streams. On Tuesdays, Thursdays, Tom and Evan go basically back to back for 2 hours of New York session. So there's a lot for you guys to tune into. We'll put a link in the description for the 7-day free trial. We'll put a link down below for you to follow Tom, even though we know Tommy is much better trader than he is a tweeter or Instagrammer, but we still want you to follow him.
Correct.
Right, Tommy?
Yeah, we can. That is definitely a fact.
But that's not what they pay you for, Tom. They pay you for the trading insights. They don't pay you to be a sexy face on Twitter, unfortunately.
No.
So we'll make sure everybody can connect with you, Tom. Guys, tune into the streams. You guys are going to love it. I think we're going to crush New York session now. And I'm really excited to see what comes of this, Tom. I would love to do another podcast with Evan and you and James once the two of them get some payouts. Evan's really close to getting a payout. So I'd like to have a little home team episode when we all take some payouts. You know, you and me have crossed the line. Let's get the other two.
Get Bruce into the futures world.
Yeah, that's like the real kick in the ass we're trying to do right now. So I need your help on that.
We're trying.
Okay. All right, everybody. Thank you for listening all the way through. If you stayed, we appreciate you very much. Make sure you're subscribed wherever you listen to the podcast, the show. It's on YouTube. It's on Spotify. It's everywhere at The Day Trading Show. Until next time, thank you very much, Tom. Appreciate you. Listeners, thank you. I'll see you guys in the next one.